All right, let's get in the trenches here, Scott. We want to go to financials. Before we get to the specific names, why would you own this sector? We were talking about this before we started the show. It seems to me like not only does it have regulatory overhang, but it also has now this debt ceiling overhang. I mean, I would think that banks are going to be the hardest hit if something happens come August 2nd with the U.S. debt.
Sometimes the best buys are the hardest buys. And I've been avoiding the banks for the last year or two. They've been lagging the market. They've been a headwind. Lately, they're showing a little relative strength. So on my virtual trade floor, I think I'm long a little JP Morgan, a little Bank of America, a little Morgan Stanley. I'm just trying to get into a tier one, and if it continues to show some relative strength and we get some resolution, I think maybe they provide a little bit of a wind in the sails versus headwinds.
And I was going to say, you know, which are your favorite in the sector, because Goldman Sachs yesterday added JP Morgan and Wells Fargo to its top 5 bank picks. Would you agree with that call, with those two?
I do agree with that call, because we've spoken about how JP Morgan is the class. Everyone loves Jamie Dimon. He tries to do things right. They had a decent report, but it was still sold. There wasn't a lot of energy there, maybe because of all the problems out there. But if you look real quickly at JP Morgan, you will see that JP Morgan, you know, broke above this recent lower range and now is flagging. So technically, that's a good sign. I'm in tier one in this area. If JP Morgan could start breaking above 42, that could be a better move here, and a surprising move, because like you said, it's hard to really own these banks.
And not to mention all the mortgage issues. I even forgot to mention that. The mortgage settlements, the having to buy back mortgages from Fannie and Freddie. All right, so real quick with Wells Fargo, though, because Goldman upgraded its price target to about $37. It's trading around $28, $29. It's a significant move. Would you be interested in this bank?
I think you don't need to own both, either JP Morgan or Wells Fargo,
right.
But Wells Fargo is good. Their earnings were okay. It ignited off of those earnings. It's holding higher also. As long as it holds higher, I think Wells Fargo is in the game just like a JP Morgan.
And let's talk about Goldman, though, now that we've been talking about it, is that it just seems like it was leading all the banks lower. Will it now kind of lead the banks a little higher, too, or will it just be a laggard?
It's trying to. Yesterday, there was some relative strength in Goldman. It was up before pulling in a little bit. If you look at the chart here, you'll see, you know, the stock is in Goldman is breaking above the lower area that the other banks are starting to follow. I drew this trend line, you know, a little earlier last week, and it broke above it. It's holding it, and it's trying to extend. If it could stay above this 135, 136, I think this could have a better move up to the moving averages around 145, 146. So there is some room before you have to worry about some big resistance here in Goldman.
And real quick, let's talk about Morgan Stanley, up 1%. You don't want to take this opportunity to sell it all? If you own it, will you stick it out?
I'm in Morgan, and I'm going to look to add. I think that Morgan had a great quarter. You talked about a lot of people saying that now Morgan's the new Goldman. I'm not sure of that yet, but Morgan looks okay here. Look at the chart of Morgan Stanley. Look at this long trend line from all the way back in February that it broke above with some power here. Look at the size of this bar. Holding in there, I'm in some. If it starts getting above 24, I will probably add, and you could probably get a move back to 25, 26 in Morgan if this bank move is real.
All right, let's round out then with the non-bank banks, right? So Visa's reporting after the bell. Expectations are that it will make about $1.23 a share on revenue, about $2.3 billion. But along the same lines as banks, and I know you said you have to own them, and it's the hardest time to own them. But yes, regulatory uncertainty sort of cleared away with the interchange fees, that they're more lax now. But again, if we do default or the U.S. loses its AAA credit rating, the U.S. consumer will be hurt. Rates will go up. They'll be in pain, and that will hurt the retailers, will hurt the credit card companies, will hurt discretionary spending.
So that's why you can't be in tier 3 or tier 4. You could be in a tier 1. And Visa and MasterCard did have a big move. They're near the highs. Look at Visa. I'll show you the example here. Look at this upper level flag. Okay, this was the move when some of the rules were laxed, okay, or they came to a conclusion, and then it's been going sideways since. So no pulling. That's showing some commitment. So if these earnings are good, which I think these people are buying it for that, you know, you see a move above 91, this thing could be 100. I'm not going to play it into earnings. I'm long a little bit now. I hope it tries to break above it before earnings, so I get a little bit of a push. But you know, at this point, if you want to be in Visa, I would do some in-the-money calls, you know, to be involved in the move, because if it gaps up, you'll lose a little bit of the gains. If you're an investor in Visa, just sit tight. It looks like this is one of the better ones.
What about getting in MasterCard today, kind of as a trade off of Visa before earnings?
Well, when's MasterCard's earnings?
I do not know that information.
All right, so let's
visit
that at another time. I don't think you need to be both in them, just the same way you don't need to be in Wells Fargo and JP. Pick one.
All right, fair enough.